Hi, I'm Sean, and welcome to another episode of Sean Talks.
Hi, I'm Jasmine.
And Jasmine is actually part of my team, and today we'll be talking about mortgage insurance. In fact, do you actually need mortgage insurance? Many of you guys might think.
Mortgage also need insurance one.
And the answer is yes. Mortgage insurance is a type of insurance policy that helps pay your outstanding home loan should you pass on or be unable to work, reducing the financial burden on your family.
We all know just how costly housing in Singapore can be, so don't underestimate the value of mortgage insurance.
Why do you need mortgage insurance then? Life is as fragile as it is. If you unfortunately pass on before completing your mortgage payments, or if you are ever unable to continue working, perhaps due to terminal illness or permanent disabilities, this can obviously cause financial struggles and make you miss mortgage payments.
And this is where mortgage insurance comes in. This insurance can cover you financially by footing the remainder of your housing loan. Its coverage does vary on certain factors like your age and policy, but generally, as your housing loan decreases over time, the coverage this insurance policy provides will decrease as well.
However, here's something many people forget. What happens if you're diagnosed with cancer or suffer a stroke? You are still alive, but you might not be able to work for many months or even years.
And who's going to continue paying your mortgage then? This is why critical illness coverage is so important. Many mortgage insurance plans only cover death and terminal illness. But what if you're too sick to work?
This means you still have to keep up with your mortgage payments even though your income has stopped. With critical illness coverage, even if you're diagnosed with a major illness like cancer, heart attack, or even stroke, you get a lump sum payout.
And that sum of money can help cover your mortgage so that you're not forced to sell your home while trying to recover. Imagine battling a life-threatening illness while still worrying about loan repayments. It's a financial burden that can be avoided with the right protection.
And the next question is, are you already covered by mortgage insurance? Some of you may actually already have mortgage insurance. Those who actually own a HDB flat and are paying their mortgage using CPF are automatically enrolled in the Compulsory Home Protection Scheme, HPS in short. This is a default administration by the Singapore government via CPF.
However, you're not obliged to stick with this policy and can opt out of HPS if you have enough coverage from other insurance policies to cover your housing loan. To check if you are covered under HPS, simply log into your CPF portal using your SingPass and check the home ownership dashboard.
If you own a private house, you will not be covered by any mortgage insurance by default as HPS does not cover private housing. Therefore, you will have to personally source for your own mortgage insurance from other insurance companies or consider a term or whole life policy that has sufficient coverage for your housing loan. This is especially advisable if you are the sole breadwinner of your family.
But do note that your mortgage insurance plan cannot be carried over from your current house to a new one. So if you're planning to move house, you will need to cancel your current mortgage insurance policy and apply for a new one.
So what are the different types of mortgage insurance in Singapore? There are various types of insurance policies out there, and like other insurance policies, there is no one-size-fits-all approach to it. Firstly, assess your risk. Do you live a more adventurous lifestyle, such as doing higher risk sports like mountain climbing, frequent traveling, and etc.?
And do you have underlying health issues, or are you prone to certain health risks that may hinder your ability to earn income? And are you the sole breadwinner of your family?
The next thing that you should consider is it a single or joint applicant? If you are the sole owner of the home and the only one paying the housing loan, you can opt for mortgage insurance that fully covers your home loan amount. And if you co-own the house with someone else, you can apply for mortgage insurance together as joint applicants. This means you can still split the insurance premiums, making it more affordable for each person. However, do note that if one of you passes away, the other person will have to pay for both shares of the premiums to keep the policy active.
These questions can help you narrow down your selection of policies by understanding what other coverage you might need from our mortgage plan, besides the standard coverage for death and terminal illnesses in most mortgage insurance plans.
Now that you know most of the stuff about mortgage insurance, next up is how do you actually pay? There are actually three main payment methods. Firstly, credit card payment. Your insurance agent or financial advisor will set a recurring payment on your credit card. If you change credit cards while your policy is active, please make sure to update your details to prevent a lapse in coverage.
And secondly, there is also recurring automatic gyro payment from your bank account, which is arranged to pay your insurance premiums. This ensures that you never miss a payment.
And thirdly, bank transfer. Log into your internet banking account and pay your premiums under the Pay Bills tab and ensure that you key in the correct reference number when making payments.
And lastly, there is also the AXS network that allows you to pay premiums through the AXS physical stations, AXS website, and AXS mobile app.
So, from deciding if you need mortgage insurance to choosing between different policies and payment methods, it may feel very overwhelming. But it's okay. Choosing the right insurance policy can be tough. Don't be afraid to consult your trusted insurance agent, or you can DM me to clarify any questions you may have about mortgage insurance.
Remember to always consider your needs and purposes, as insurance is never one size fits all. But don't just think about what happens after you're gone. Think about what happens if you're still here but unable to work.
My name is Sean.
And my name is Jasmine. Hope this info is helpful for you, and we will see you in the next video.